All right, hello. I feel like we are live. Welcome, everyone. Riker, if you wouldn't mind, please checking on all of the platforms. Hopefully, we are popping up live in all the places. But welcome, guys. Oh my goodness. So I'm so excited to share this session with you all today because, to be honest, this is one that is a little bit daunting to me. I'm going to move this mic out of the way. I was using my mic while traveling, so I ended up breaking it. So I'm not thrilled about that, but nevertheless. Alrighty, guys, so let's dive in. So today we're talking about bookkeeping. Okay. Ethan decided he wanted to give me a call while I'm on this live, but it is all good. All right, so we're talking about bookkeeping, and I know everyone's really excited to talk about such a riveting topic, but hear me out. Hear me out. This is oh so very important. Once your books are kept in the right way, if your books are good, you can solve some of the cash flow problems that you may have in business, whether it is short-term rental investing or any other business. You can take advantage of deductions that are available to you. You could really start to build that confidence in terms of knowing where your cash flow is coming from on a month to month basis. Get yourself out of the stress cycle of trying to figure out month to month what's going on. What's going on with my funds? What's going on with my revenue? Because although short-term rentals and mid-term rentals can be an amazing cash flow and cash cow type of business, it can also reflect as a leaky bucket as well, right? Rental property can be a leaky bucket if our books aren't kept correctly, if we are not planning for maintenance on our properties, and so on and so forth. So let's dive in, guys. My name is Dr. Rachel Gainsborough. I am a former pharmacist. I'm still a pharmacist by training, right? Turned full-time real estate investor. My goal is to impart upon you all of the learnings that I have acquired over the last few years, operating my short-term rental and mid-term rental business. We primarily help busy doctors, women doctors, busy professionals who are looking to get started and to optimize and launch their properties as well. Okay, so I just got off of a really amazing call with the members inside of our coaching program, and we had the opportunity to dive a little bit deeper into some performance for certain markets. And taking a look back on our business is a great way to identify, well, how did we perform last year around this time of year? What about the previous year? With that information, we're able to make decisions on our investing on our properties. One of the things that we're looking at is if we cannot solve some of the cash flow issues we're seeing with one particular property, we may have to do what is called a return on equity audit. So let's identify how much equity we have on a particular property, and let's assess, well, what would it look like? How much cash would we be able to bring in if we were to sell it versus how is that cash flow looking year over year? And so there's a couple properties in my portfolio that were on the chopping block that were on the chopping block based off of that, right? So since they were on the chopping block, we were able to use a strategy called a 1031 exchange to get to a bigger and better property and move on from there. Okay, so in plain speak, all of that to say, if in fact a property is bringing in, say, 50,000 a year gross, is bringing in 50,000 a year gross, and let's say that the cash flow on the property is 50,000 a year, meaning say it's bringing in 80,000. Let me be a little bit more realistic with the numbers. Say it's bringing in 100,000, and after all expenses are taken into account, the net revenue is $50,000, which is not bad at all, right? I want to compare that to the actual equity that is in the property. Say there's $30,000 worth of equity in the property. Well, there's no reason to sell because I'm bringing in more cash flow than there is equity on a yearly basis, right? So I would keep that property. But let's say in this particular situation that we were looking at a little bit earlier, the property is bringing in $20,000 per year net, which is significantly lower. And let's say there's over $100,000 of equity in that property. Well, you know what? It would take me 5 years to get to that equity. I would most likely sell. I would sell and go into a market that would cash flow me a bit more to get bigger and better. Okay, so that is my particular situation. Everyone's situation is different. There are so many contingencies that you want to take into consideration before you would make that move. So, financial planning and understanding your numbers is absolutely huge. All right, so for those of you who are joining us, I would love to see a hello, a high five, a high 10 in the chat. I want to make sure that we are fully live. Okay, hang on. Okay, awesome. A little BTS behind the scenes. You guys are watching how the sausage is made. I want to make sure that we are live and you can see all the things. Okay, awesome. I'm getting a hand, a thumbs up. Okay, so like I mentioned a little bit earlier, I want to talk with you about the 4 principles of bookkeeping. And I will caveat it with this. You do not have to keep all of your books. As a matter of fact, I don't keep my books. I have outsourced it and I'm in the process of outsourcing it to yet another team. So that is one of my goals for this quarter is to find a team that is ready to meet me at the next level. Okay, so the team you start off with is not always the team you're going to end up with. What got you here isn't going to get you there much, right? So we outsource our bookkeeping, but we have to remember it's our responsibility to make sure that what we're submitting is correct, how we're categorizing things and working with our bookkeeping team for accuracy. It's going to be really, really important. The number one reason I like to outsource my bookkeeping processes is because of the consistency. Okay, so hear me out. You do not necessarily have to start off outsourcing. You can use tools and apps such as Simply Wise. That's a really interesting tool. There are spreadsheets. You can use Excel spreadsheets. However, when it comes time for tax season, especially if you're looking to take advantage of some major tax benefits that are available for short-term and mid-term rentals, you want to make sure that all your I's are dotted and all your T's are crossed. Okay, so keep that in mind. All right, so the 4 principles. Principle number one is accuracy and consistency. Accuracy and consistency. And if you are struggling with accuracy and consistency of your books, this is where I think it's so important. It's also very important to figure out what that game plan looks like so that you're consistent. For me and my business, we have Financial Fridays or Finance Fridays. You can have Money Mondays. Figure out what that schedule is and block off time on your calendar to address the bookkeeping side of your business, whether it includes you reconciling all of your receipts in some way, shape, or form. That's great. Whether it includes you meeting with the member of your team, whether it's an assistant or a virtual assistant. There are some wonderful virtual assistants here stateside and overseas that can help you out with the bookkeeping side. Okay, I'm getting some thumbs up. Hello, guys. Feel free to drop your questions in the chat as we discuss this very, very important pillar. So accuracy and consistency is principle number one. Okay, so today we're going to keep it short and sweet. But the reason again is we want to, honestly, I want you to take advantage of all the top tax strategies out there. And the more you're able to ensure that all of the income, all of the expenses are recorded correctly and are documented correctly, the easier you're going to make it For your tax CPA or your enrolled agent, whoever is taking care of your filing for your taxes, the more they're going to be incentivized to do a great job and make sure all your I's are dotted and your T's are crossed. If you come at them, my friends, with a shoebox full of receipts, and their responsibility is to reconcile this, it's going to make it difficult for them. It's going to make it difficult for them to ensure that you're leveraging the highest possible tax code that is to your benefit. Okay, so these four principles, it starts with accuracy and consistency. You want to regularly schedule time to update your books. You want to regularly schedule time to update your books. So go ahead tonight, put it on your calendar for those of you who have a short-term rental, for those of you who have a midterm rental, for those of you who are looking to get started and you're trying to figure out, you know what, Rachel, how do I come up with my down payment for my short and midterm rentals? Well, you want to look at your numbers, you want to look at your money, you want to look at your books. And once you have looked at your books, you look at your numbers, you're able to then move forward. So carve out some time for Finance Fridays or Money Mondays inside of our community. These are the things we talk about. As a matter of fact, when anyone launches a property, shout out to Ms. Barbara, shout out to Ms. Valerie, Dr. Valerie, actually, who just launched their property this month. One of the things that comes with launching are the expenses. And so we want to understand first and foremost, how do they come up with their down payments for their properties? What are the expenses looking like? How much was designed? Who did they work with? The good, bad, and the ugly. But all of that has to do with looking at their money, looking at their numbers. It's oh so very important. Okay, within that first pillar, guys, we are wanting to make sure everything is reconciled. So, what does reconciliation entail? I'm not going to pretend to be the expert for reconciliation, for leveraging books for the accounting stuff. I really don't like that side of the business. I just like the side of the business where the money comes in. I don't like the money going out, expenses type of information. So the reconciliation is done with the bookkeeper. We use a platform called QuickBooks as well. Our bank is integrated with QuickBooks. Shout out to Relay Bank. I love Relay Fi Bank. They've been really, really good to us. They're they're definitely a newer bank, but what I like about them is that they use a categorization system inside that is in, I would say, alignment with with my lifestyle. So they use the profit first methodology where we can auto allocate the funds in our main account into like different buckets right in the bank account. So I'm not gonna dive in there quite yet. Okay, so that is principle number two I want to cover with you is detailed categorization. Detailed categorization. And again, for detailed categorization, this does not necessarily have to be up to you. This is up to you and your CPA or your enrolled agent working together to come up with some of those categories. Okay, so when you have detailed categories, you're able to have a little bit more insight into what your business expenses are looking like in terms of, well, last month I spent 20% of our income on this particular category. So very important. For instance, if you determine that your, I guess the consumables, they go into operating expenses. Consumables are like snacks, dish detergent, dish soap, laundry detergent, those things that get used up. Well, how do you want to categorize it for a short-term rental business? How do you want to categorize it for a midterm rental business, right? Which bucket does it fall under? So that's going to be a conversation that you want to have with your bookkeeper, your CPA, because depending on how your taxes are filed, those expenses may be tracked in a particular way. Okay, and you will have insight on, wow, last month we spent XYZ amount on consumables. In the previous month, we spent um, 50% less on consumables. So at that point, you can determine, you know what, this property is losing us money, this property is performing better, and so on and so forth. But without the detailed categorization, you will not have the ability to really identify what is going on and make decisions based on your business performance in real time. You want to be able to make decisions in real time for your business. Okay. Another detailed categorization, I would say, like if we splinter it out, another important activity is to really segment out and break down your income based on property level. I know not everyone does this, but you do want to break it down based on property level. You want to break it down based on rental period and so on and so forth. So we were looking back again at a property a little bit earlier today. We were able to identify year over year. Here's how the property performed. So last year, I would say hang on, around May, no, yeah, May to June, the revenue that came in was 13% lower than the previous time period. Okay, so from June 22 to May 23 versus May 23 to May 24 ish, revenue is down by 13%. Okay, so what do you do in those particular situations? Well, you can dig in a little bit deeper, and the question that you want to ask yourself is also, well, not only how is your property performing, but how are other properties performing, and kind of benchmark it against that. Okay. And custom categories. Now, I often see that for our business, we have to come up with some custom categories because our business is different, right? So, whether you have a cleaning business, whether you have a business where you're locum tenens, are doctors who are traveling from hospital to hospital, they're remote docs. You have a variety of different businesses, and not all businesses will have the same category. So, this is the conversation you want to have with your bookkeeping team, and you want a bookkeeping team that's able to then use those categories on a recurring basis. So if last month the laundry detergent went into the consumables, well, for this next month we want the laundry detergent to go into the consumables as well, so that we can make better comparison. Okay. All right. Next up is cash flow management. Pillar number three, cash flow management is very, very important. This is actually one of my favorite. I love to see cash flow that is coming in. And the goal is to monitor and manage it so that you feel financially stable. Okay, you want to look at your liquidity. You want to make sure that you're regularly preparing your cash flow statement. It gives you the ability to understand what's coming in, what is coming out, so that you do not feel like you're in a constant stress cycle of not knowing, well, I have $10,000 now. However, I have $12,000 of expenses that are coming out tomorrow. Okay, so cash flow management is also very important. Cash flow forecasting is also very important as well. So you want to look at your historical data. Last year, how much money did you bring in versus this year? How much is coming in? And from there, you can then potentially project what is a next month looking like, what are the next 90 days looking like, and so on and so forth. So we have several recurring revenue streams, and we know that, okay, June the 1st, this month, we anticipate we're going to have, say, $10,000 in revenue that's just going to be recurring, that's coming in because we have a couple midterm rentals that are extending. So those are recurring revenue streams, so to speak, for a shorter period of time. All right. And from there, it's very, very important. One of the risk mitigation techniques, excuse me, one of the risk mitigation techniques that we have used in the past is reserves, cash reserves. Cash reserve, there's nothing like having an extra 5, 10, 20, 30, $50,000 in the bank. Okay, 6 months of expenses if you can swing it, to protect you from the eventualities of emergencies, unforeseen expenses, things that just pop up. There is nothing like having a nice, warm, and fuzzy cushion in the bank to protect you and to help you mitigate risk. So, very, very important part of cash flow management is starting a fund, starting a savings for your cash reserves. That is your security blanket, that is your ability to mitigate risk. Even if it's $1,000 to get started. I remember when I was in $500,000 in student loan debt, my very first step was to have $1,000 in emergency funds just in case something were to happen. And then we grew from there. So make sure both in your personal life as well as in your business, you have an emergency fund, you have some cash reserves to protect you from the eventuality of, say, a down season. And for those of you right now who are living it up, you're living your best lives right now because you are in peak season. I see you. I see you, and massive congratulations to you. But do not forget what it looks like and what it feels like to have low cash reserves. Do not forget that feeling. It is not a good feeling. So make sure that you are squirreling something away for a rainy day. I don't care if you have to use the Relay Fi banking or the bank at the hospital. I used to have a bank at my hospital that they were only open like 2 hours a day, 3 days a week. That's where we were able to save the vast majority of our funds because it wasn't as easily accessible. So implement something like that. Make sure that it's not easily accessible so that you can have those funds for a rainy day. If you have my type of personality, I'm the free spirit. I love to shop. I love to buy and all the things. So I have to kind of hack my way into saving funds. Okay. So know thyself. Know thyself. For those of you who are not free spirits and you're very responsible, massive congratulations to you. I am loving it. All right. The fourth pillar, last but not least, guys, we're covering the principles that I believe that you need to implement today. And if you cannot implement them on your own, find out who can. And so we have resources inside of our community. We're going to drop a link to our friend Kason. He is one of the resources in our community. As a matter of fact, let me see if he is not trying to. Okay, hang on. I didn't know if he was available to jump on or not, but nevertheless, would love to connect him with you guys and interview him on here as well. But let me give you this last principle. Let me drop this last gem for you, and and we will round it out, my friends. Okay, so the last gem is compliance and tax efficiency. So this is a little bit of a loaded conversation because here's the deal. Compliance is very important, right? I do not want you going to jail. Okay, let me say that again for those sitting in the back. I do not want you going to jail, right? That's it. That's it. So that is where compliance come into play. Compliance is where we are doing the things, and I joke, I jest about the jail, but I don't want you dealing with a whole bunch of heavy fees, heavy fines, and all of that. Trust me, I know. Oh, interesting. For some reason, we have lost audio. Okay, so if we've lost audio on Facebook, let's drop them the YouTube channel link. Hopefully, YouTube is fine. Okay, alrighty. So trust me, I know. We listen. Let me rewind a little bit. Compliance and tax efficiency is also very important. I have owed the IRS $40, $50, $60,000 before, like in one tax year. Lots of money, right? We had a high enough income, but we didn't have enough to offset our high income. So that is why I'm all in on this tax strategy that is inside of the short-term rental loophole. Very, very important. That is how we're able to leverage our tax efficiency. Okay. So there are rules, there are regulations. However, the IRS, the government, the US government incentivizes us who are property investors, who have rentals, and I want to take advantage of all of those opportunities, because at the end of the day, it's not how much money you make, it's how much you get to keep. And we were able to save over $170,000 in due to short-term rental tax, um, in a tax refund. Okay, so all this to say, I came from owing a whole lot of money to not owing anything and even getting a check because of my short-term rentals. So for those of you who are multitasking, come back to me. It's so very important. It comes from having that foundation, the bookkeeping foundation, to making sure that we have all of our ducks in a row from a bookkeeping perspective. And from there, leveraging tax strategies such as cost segregation studies. And we've already talked about that with Yona on a previous episode. So, cost segregation studies, material participation. This is all a part of the tax code. You have access to these benefits that can offset your W 2 once you are taking care and keeping good books, once you have invested in a rental. And so, for those of you who are watching today, you have not invested yet, you're in the right place, my friend, because my goal is to make sure that each and every one of you have access, each and every one of you are able to invest as well. Okay, so I'm getting, okay, the mute button is red, so I'm wondering if that is because I am muted. Anyway, nevertheless, I'm not going to worry about it. I should have done a better mic check. I don't know. I have no idea. But nevertheless, guys, we're not going to let it deter us. Okay. So, pillar number 4, again, it is compliance and tax efficiency. With compliance, with tax efficiency, you're able to take advantage of tax deductions. And again, that comes from meticulous bookkeeping as well. And I'm not very meticulous with my bookkeeping. So, I leverage the support and help of others to help me out. And so, I was looking to see if Kaysen could join us. Okay, so I'm being told that I could be heard on YouTube. Hopefully, I'm clear on YouTube. With compliance ensures that the local taxes, our state taxes, the federal taxes, all of those different buckets are being adhered to, because there are changes in those requirements. And if you're not working with someone who is well versed on the real estate side of things, you're going to be leaving a lot of money on the table. So definitely seek professional guidance. And I thank you all for joining. I'm seeing thumbs ups. Feel free to drop your questions in the chat. We will get to them as soon as I log back on. I look forward to connecting with each and every one of you guys. So, yeah, so that concludes our 4 pillars. I want to review them with you real quick. The 4 principles of bookkeeping for short-term and mid-term rentals, my friend, is number 1, accuracy and consistency. Number 2, detailed categorization. Number 3, cash flow management. And number 4, compliance and tax efficiency. Make it your goal this next quarter to get caught up on your books. If you need help, DM me, and I'm more than happy to connect you with our resources that are helping the members inside of our community to get caught up, to make sure that their business entity is set up the right way, and so on and so forth, guys. All right, so this concludes our session today. Just remember, guys, adhering to these principles are going to help you to mitigate all sorts of risks, help you to manage your financial records. And once you're able to manage them, this is a great leveraging tool for you to continue to invest. People are always asking, how can I scale? How can I scale? Part of it is keeping great books. All right, so that concludes our session for tonight. If you want to get on a call with us to talk a little bit more about your strategy, feel free to book a call, shorttermgems.com/book, shorttermgems.com/book. We are here to help busy medical professionals purchase, fund, find, launch their very first or next short term or midterm rental. We're here to support you every step of the way. And so this concludes our session for tonight. Love you all to the moon, and I will see you next time. Bye bye for now.